Comes as investors shift to safe haven assets after steep U.S. tariff took effect. Now, despite no progress on renegotiation on the 30% tariff deal, the rand recovered to around 17.69 to the dollar, up 0.5% on Wednesday. The Reserve Bank also reported a slight dip in foreign reserves to $65.14 billion. Now, on the local bourse, the all share rose 0.63%, with the top 40 up 0.78%. Market analyst Bruce Chalker unpacks the latest moves.
The South African rand continued its recovery on Thursday, trading around 17.73 against the US dollar, supported by a combination of rising gold prices, a weaker dollar, and investor risk aversion, following the US disappointing non-farm payroll data. So the delay in the US interest rate cuts has shifted global sentiment, eroding the dollar's carry trade, appealing and boosting commodity-linked currencies like the ZAR. So as a major gold producer, South Africa is benefiting from the safe haven demand for the precious metals, which has added momentum on the rand's rally. And then market analysts note that the ZAR may continue to gain in the short term as souring US sentiment and firm local fundamentals aligning. So South Africa's economic outlook remains buyout by easing domestic inflation and cooling interest rates, which are creating a more stable investment climate. The country's gross foreign exchange reserve rose to a record of $69 billion US dollar in July, up from 68 billion US dollar in June. So driven by high gold and foreign currency reserves, although SDR holdings dipped slightly to 6 billion US dollar, the forward position also improved. Meanwhile, the bond market reflected confidence in the local economy with the benchmark 2035 government bond yields. So the government bond yields are ticking up to 2% basis points to 9.65%, indicating steady demand for South African debt. Together, these indicators underscore a strengthening ZAR foundation amid global volatility.
On that note, it's a wrap on the Business News Desk. Here with me, Moik Peterson. Let's take a look at our